Are you looking for the best reverse mortgage in Australia for your situation? Comparing interest rates is important, but did you know there are actually over 150 points of difference between the top 4 reverse mortgage lenders? These factors can have a huge impact on your eligibility for approval, how much you can borrow, and the long-term cost of the reverse mortgage loan. In this video, we reveal the truth about comparing reverse mortgages in Australia. As you'll see, there's so much more to finding the right reverse mortgage lender than just comparing interest rates and fees. We'll share the same method our specialist reverse mortgage brokers have used at Seniors First to help more than 5,000 Australians since 2006. It's the proven way to release home equity safely and potentially save thousands in the process. Here are the 3 core elements of an effective reverse mortgage comparison: loan product features, including rates and fees, hidden lender credit policies, and post-settlement lender procedures. Okay, before we get started, let's explain what exactly is a reverse mortgage in Australia. It's an equity release loan for homeowners 55 years or older. You can unlock between 15% and 50% of your home equity for cash, based on age. Common loan purposes include renovations, debt consolidation, living expenses, travel, a new car. Monthly repayments aren't required. The interest is added to the loan balance each month. The interest rate is usually variable. If you don't make voluntary payments, the interest will compound over time. Interest charges are designed to be offset by future increases in the home value. You retain full ownership of the home, and you continue to enjoy 100% of the capital growth. The loan, plus any interest and fees, is repaid when you sell the property or when the last surviving borrower passes away. Reverse mortgages are increasingly popular in Australia because retirees can access some of the wealth tied up in the family home without the need to sell and downsize. Okay, so let's begin the ultimate guide to comparing reverse mortgages in Australia. As mentioned earlier, there are 150 plus points of difference between the top 4 reverse mortgage lenders. Unlike normal home loans, reverse mortgages in Australia are very complex, and it's difficult to compare providers side by side. The main reason for this is that most of the important data points are hidden. They're not published anywhere. We'll get to these shortly, but first let's focus on the parts of reverse mortgage you can compare. Number 1, loan product features. All lenders in Australia publish core aspects of their reverse mortgage loan products. Here's a limited sample of product features that lenders make publicly available: interest rate, application fee, minimum and maximum loan amount, loan to value ratio, LVR, the percentage of equity you can release based on age, minimum age requirements for eligibility, property value range, the minimum and maximum home values accepted, access options, how you can draw down the loan and access your money. So far, so good. Now for the tricky bit. Number 2, hidden lender credit policies. Lender credit criteria are the hidden rules that can affect your application for a reverse mortgage loan. They're not publicly available, but are absolutely central to how long your loan application will take and whether your loan will be approved or declined. Here is a sample list of just some of the credit policy areas that lenders assess in a loan application. Power of attorney. Is it acceptable? Gifting or loaning money to family? How much and for what purpose? Business or investment? Some lenders will reject the loan if it's for this purpose. Employment status. Some lenders require additional documentation for self-employed people. Property restrictions. Is the location and property type acceptable? Debt consolidation. Some lenders may limit how much you can use for this. Renovation funding. Rules vary. Some lenders disallow structural changes. And the big one, spending patterns. Although technically no minimum income is required for a reverse mortgage, some lenders apply a more rigorous cash flow assessment than others. They will scrutinize your spending habits and may decline your application or limit the loan amount based on what they find. There are dozens more of these credit policy areas, and each lender's position on any criteria point is often different from its competitors. Expert tip. Without the industry knowledge of a specialist broker to guide your choices, you may waste a lot of time and energy talking to different lenders only to be rejected. Number 3, post-settlement lender procedure. The average length of time borrowers hold a reverse mortgage in Australia is about 7.5 years. However, these loans don't have any maximum terms, so it's possible you might have a loan for 10, 20, or even 30 years. Over the long term, a lender essentially becomes your retirement funding partner. This means their post-settlement loan procedures will be a defining factor in your lived experience as a borrower. Now, once again, this information is hidden, making comparison really difficult. In fact, only a specialist broker such as Seniors First has deep, first-hand experience of the internal processes and credit criteria of reverse mortgage lenders. Here are 3 areas where post-settlement reverse mortgage procedures can be extremely different between lenders. Reverse mortgage interest rate pass-through. The current interest rate of any lender is just their price at a moment in time. But what's their historical record like in terms of passing through Reserve Bank interest rate cuts? It turns out some lenders are much better than others. Whether a reverse mortgage lender is consistently inclined to pass on RBA rate cuts in full or not is perhaps the most influential factor on the long-term cost of your loan. Redraw Access. Many reverse mortgage borrowers like to make voluntary payments into the loan. However, depending on the loan product, there may be restrictions around your ability to redraw these funds back out of the loan at a later date. Is it possible to redraw funds without paying a fee? Will the process be quick or long and painful? Will you need to switch products or even refinance to a different lender altogether? The answers vary depending on the loan product. Cash reserve access. A pre-approved cash reserve is a very popular reverse mortgage product feature. It's like a line of credit where available funds sit in reserve without attracting interest until you draw down on it. Each of the lender's cash reserve facilities work differently. Some processes are quick and easy, whilst others are clunky and difficult. Will you be able to access funds anytime through phone or online banking? Or will the lender force you to submit additional documents each time, or even value your property again before releasing the money? Expert tip: post-settlement loan procedures can have a big impact on your long-term experience of a reverse mortgage, and even on your quality of life in retirement. Which brings us to the final section of this video: why it's best to use a specialist reverse mortgage broker. To recap, there are more than 150 points of difference between the top 4 reverse mortgage lenders in Australia. As a borrower, you have 3 options when it comes to applying for a reverse mortgage. Go direct to the lenders and try navigating the market yourself. Use a generalist mortgage broker who is unaware of the 150 points of difference. Or engage a specialist reverse mortgage broker like Seniors First to help you. Only a specialist broker has the deep first-hand experience of the 3 elements required to make a truly effective reverse mortgage comparison for your personal situation. Loan product features, the hidden credit criteria and lender eligibility rules, and post-settlement lender procedures. Expert tip: with 5,000 plus happy customers and 300 plus 5-star reviews, it's clear a lot of other Australians like you have concluded that Seniors First is best placed to deliver the perfect equity release outcome with minimum fuss. Here are the benefits of using a specialist broker for reverse mortgages in Australia. Easily compare loan products, find a great deal. Navigate the 150 plus points of difference. Match with the right lender. Maximize your chances of loan approval, and get advice on loan structure to reduce interest cost and preserve home equity. And by engaging Seniors First, you'll also avoid wasting time and making costly mistakes. Avoid the hassle and stress of shopping around yourself. Get all the legwork done for you and enjoy support and guidance throughout the entire process. Thanks for watching the ultimate guide to comparing reverse mortgages in Australia. To start the process, go to seniorsfirst.com.au and check your eligibility for a reverse mortgage loan. It's free and takes just 1 minute to get an indicative result.